morning, viewers, and welcome to the market review for midweek. Today being the 30th of September 2020, last day of September, and the market review continues. We look at the private equity and activities there. Today we're taking an overview of private equity investments in Nigeria, some insights that we need to bring to the fore as we continue the build-up to Nigeria's COVID-19 pandemic and its impact on the private equity investments in Nigeria, legislations and how it's improved the private equity activities in Nigeria, fundraising activities for private equity firms in the country, developments in funding and private equity activities, tax incentives for private equity firms, fund structuring for PE firms, and the way forward in terms of what could happen to scale the activities of private equity as it concerns private capital investments, which is what we need at this time, a very challenging phase, where the COVID-19 disruptions and the slump in oil price is affecting the economy. And so the slump in oil prices and the COVID-19 pandemic have placed a strain on the Nigerian economy and disrupted financial planning by many businesses. A prolonged disruption is likely to lead to renegotiation of deal terms, as we're seeing across various companies in the country that have private equity investments, defaults, termination of contracts, layoffs, inflation, currency devaluation, and a further downgrading of even the country's sovereign credit rating. All this culminates into a decline in foreign direct investments, which we've seen in the first quarter and second quarter of the capital population report, and a consequence in terms of the impact on private equity activity in the country. Now, the federal government made some moves in order to mitigate these challenges. They tried to see what they can do from the fiscal space and even the monetary space. The first adjusted the 2020 national budget, as we know. It was reviewed from the fiscal point, and the Central Bank of Nigeria technically devalued the naira as we continue to see them take the steps, also in agreement with multilateral and financial institutions, to harmonize the exchange rates. This has been one of the big points discussed over time in Nigeria. They need to harmonize the foreign exchange rates. Also, there was an approval of a 50 billion stimulus package for households and small and medium enterprises affected by the COVID-19 pandemic. That's the Central Bank of Nigeria. And several other interventions have come up, like the current Nigerian Youth Investment Fund, NYIF, a 75 billion naira intervention, which is being coordinated by the Ministry of Youth and Sports, working with the Ministry of Finance and other relevant ministries to support young entrepreneurs in the country as they continue to navigate the impact of COVID-19. These are some of the activities we're seeing from the fiscal authorities and monetary authorities. Well, let's go further in terms of what has helped the private equity space amidst the challenging phase we're in. Two key legislations, the Finance Act 2019, the Nigerian Police Trust Fund Establishment Act 2019, as well as the Federal Consumer and Competitiveness Protection Commission Act, among the legislations that have helped to further create an enabler for the activities of private equity activities in the country. These acts and legislations have helped in terms of how they provide, for example, the foreign to foreign major and Nigerian component foreign major guidelines, which will allow private equity companies to see how they can intervene where required, and of course, their transactions in the country. The Finance Act amended various provisions of existing tax legislations, addressing tax issues previously not covered under the existing legislation. Some key amendments in that act include the categorization of companies for tax purposes, and they fall into the following: small companies, which are those with an annual gross turnover of 25 million naira or less. These are now exempted from paying companies income tax, but must still register with the Federal Inland Revenue Service and file their tax returns. Then the medium-sized companies, which are those with an annual gross turnover between 25 million naira and 100 million naira. These are liable to companies' income tax at the reduced rate of 20%. Also, in that level, that's a taxable profit. A police fund levy of 0.005% of the net profit of the companies operating business in Nigeria, and a tertiary education tax at the rate of 2% of assessable profit or large companies, which are those with an annual gross turnover of more than 100 million naira. This remain liable to companies' income tax at the rate of 30% of taxable profit. Police fund levy of 0.005% of the net profit of the companies operating business in Nigeria, and a tertiary education tax at the rate of 2% of assessable profit. Nigerian companies with at least 25% foreign equity investments that have no taxable profit or with taxable profits less than the minimum tax are now liable to pay a minimum tax of 0.5% of gross turnover. An increase in the rate of value-added tax, which already we know is from 5% now to 7.5%. The introduction of withholding tax at the rate of 10% on the dividends of investors in upstream oil and gas companies. The capital gains tax, which is now payable on any compensation for loss of office in excess of 10 million naira. Documents relating to electronic transactions are now liable to stamp duties, while the Nigerian Police Trust Fund Establishment Act 2019 put the PTF to provide funds for the training and welfare personnel of the Nigerian Police Force and to procure security machinery in the country. The procurement of security machinery and equipment. The Act imposes a levy of 0.005% on the net profit of companies other than small companies as defined above operating a business in Nigeria. This has gone on since November 2019. The FCCPC issued the Foreign Major Guidelines, which regulate the acquisition of shares or other assets outside Nigeria resulting in the change of control of a business, part of a business, or any asset of a business in Nigeria. The Foreign Major Guidelines provide for an expedited review process of 15 business days on the payment of the relevant fees and the submission of specified documents. As we all know, Nigeria has signed the Africa Continental Free Trade Agreement, which is aimed at creating a single continental market for goods and services. With free movement of businesses, persons and investments, the agreement, which is expected to accelerate the establishment of a customs union, will also expand intra-African trade and enhance competition. The agreement, however, will not become effective in Nigeria until it is ratified by the National Assembly. There has been significant activity in the insurance sector, largely driven by the sector regulators' revised capital requirements for insurance companies. Recent transactions include Verod Capital Management acquisition of 100% of the equity of Metropolitan Life Insurance. That was a big story in the year. And 77.22% of ARM Life PLC, as well as acquisition of 39.25% of Royal Exchange General Insurance Limited by Blue Orchard Finance, the investment managers to Insure Resilience Investment Fund. In the technology space, we've seen Umuntu Fund investing in the Max.ng, the Pioneer app-based motorcycle hailing service in West Africa. Those have been part of the investments and activities that we've seen so far, and we hope to get more insights into what happens in that space. We look at fundraising activities. They continue amid the backdrop of activities in economic growth. A number of Nigeria-focused funds seeking capital continues to grow as general partners continue to see opportunities for investment in Nigeria. I mean, Verod has been so dominant in the private equity space this year. Verod Capital Management announced an interim close of its Verod Capital Growth Fund 3 LP with commitment of about $200 million. That's what has been really happening in that space. Nigeria, amidst everything, for our viewers, remains an important investment destination in Africa. That's one takeaway so far, even as the country marks its 60th anniversary. It's one of the most popular investment destinations in West Africa, alongside countries like Cote d'Ivoire, Senegal, Ghana, and Benin Republic. Available data for National Bureau of Statistics indicates, however, a decline in total value of foreign investments coming into Nigeria. Just in 2019, that figure was $934.34 million, while in 2018 it was $1.19 billion. So in essence, what we're saying is that we're still having low investments, and this year already we're seeing those trends in the first and second quarter of capital importation report. The financial services, telecommunications, manufacturing, and agriculture sectors attracted most of the FDI. That's it in 2019. Some of the big stories were Coca-Cola's acquisition of Shea Limited, the merger of Access Bank and Diamond Bank. That was a big story for last year. Some of the significant deals in the market that occurred. Now, other significant deals include the Vera Capital Management's investment in Daystar Power Group, Sahel Capital's investment in Lagdo Group Limited, and the Partech-led series, the funding of Kudi. For those of you that know Kudi, a leading digital payments and collections company in Nigeria. In terms of transactions, we've seen the most common type of transactions, private equity based in Nigeria. They are the acquisition of shares through subscription of transfer from existing shareholders, quasi-equity instruments, and more recently, debt. Traditionally, structures used for transactions include equity acquisitions, usually by offshore registered special purpose vehicles, of majority of significant minority interest in Nigeria portfolio companies. However, current economic challenges and risk management concerns are contributing to the evolving trends towards adopting debt and convertible instruments and alternative capital structures. Investments are typically made in companies with a good track record of performance, potential for growth, and a good management team. We've seen some developing stories around companies that have invested in pre-existing companies and firms where now the management issues and the management initially they are being, they're trying to take over, and this is causing a lot of legal concerns. So that is one very important area that we will continue to monitor, how companies have evolved, developed, and then when there's some level of venture capital private equity investments, along the line there's some misunderstandings and challenges, and then the issue of ownership. We will bring that up in the course of this program as we look at the way forward for private equity, private capital investments in Nigeria. Exits remain one concern for companies and private investments in Nigeria. The secondary sales to trade buyers, private equity firms, and other financial buyers remain the most common forms of exit. There were notable exits like highlighted in 2019 included the Vera Capital Management exits from Roto Print Limited, a leading vertically integrated supplier of flexible packaging products to top-tier consumer product companies across West Africa. You also saw UTL Trust Management Services Limited, a Nigerian trust company based in Lagos, also experiencing that exit from the investments. Helios Investment Partners, very big in terms of private equity investments, exit from Elan Oil and Gas PLC, an African Capital Alliance exit from Cornerstone Tower. There were also significant exits that we experienced in last year, and definitely as we ramp up the year, we would give a snap on what exits occurred in 2020. Funding, very important, very, very important funding. Now, private equity funds in Nigeria usually obtain funding from institutional investors, such as pension funds, sovereign wealth funds, development financial institutions, insurance companies, financial institutions, and high net worth individuals. Those are the people that put in one. There's some very big private equity investments that we've seen in Nigeria. For example, Carlyle Group, one of the biggest in the globe, have investments in projects like the Dangote Petrochemical Refinery and some of the financial institutions in the country. So this is the measure. Funding comes from these various means, just for you to note for our viewers. Now let's look at tax incentives. This is one area that attracts private investments into economies. Yesterday we learned that $100 trillion of global private capital is looking for where it can invest. $100 trillion. Imagine Nigeria gets like 1% of that. You can imagine where it would be. But let's go on. The investment incentives include the following for tax incentives. For example, what the Nigerian Investment Promotion Commission has been doing, the Pioneer Status Scheme grants companies operating in certain industries again, tax incentives. The Pioneer Status Scheme, it grants companies incentives, and that's a non-renewable income tax holiday for a period of 3 years, which can be extended for 2 additional years. It also provides interest earned by a foreign company on its deposits in domiciliary accounts in Nigeria that one is also exempt from tax. Purchasers of local plants and equipment are entitled to an investment allowance of 10%. Capital gains tax, CGT, is not levied on gains from the sale of shares, stocks, and treasury bills. Companies engaging in the use of Nigeria's natural gas resources are entitled to a tax-free holiday for an initial period of 3 years, or an additional investment allowance of 35%. Machinery and equipment purchased for the use of gas in downstream operations are exempt from value-added tax. Interest on securities issued by the federal government of Nigeria and the state, corporate, and supernatural bonds are exempt from tax until 1st of January 2022. Interest payments on foreign loans that have a repayment period, including moratorium and grace period of 2 years and above, enjoying significant tax exemptions from 10% up to 70%. Consequently, private equity funds that provide debt capital can enjoy a deduction in their tax liability. Investors from countries that have a double taxation treaty with Nigeria enjoy a withholding tax reduction of up to 7.5%. So it's good to check which countries Nigeria has a double taxation treaty with. Companies located in export processing zones, EPZs, that's why you're seeing various EPZs now. Lekki is one that's boarding already, and there are prospects for others in some parts of south of Nigeria. They're entitled to a 100% capital allowance in the year of assessment. In addition, a company that is 100% export-oriented but located outside an EPZ enjoys a 3-year tax holiday. Profits of companies whose supplies exclusively inputs for the manufacture of products for export are exempt from tax. Now, if plant and machinery are transferred to a new company, the tax written down value of the asset transferred must not exceed 25% of the total value of plant and machinery in the new company. Who is this whole initiative and incentive targeted at? Who's it directed to? Schemes above are directed at the following: pioneer status incentives that are granted to companies engaged in industries that are recognized as pioneer industries where the government wishes to encourage participation and investment. So that is where the whole incentives is going to. Capital gains tax incentives are granted to any person, individual and corporate, holding shares in a Nigerian company. Gas utilization incentives are granted to all companies that utilize natural gas. Huge incentive there. Capital repatriation, tax exemptions on interest on foreign loans, and relief from double taxation are granted to foreign investors. Export incentives are granted to companies that are engaged in an improved manufacturing activity in an EPZ, export processing zone, and incur expenditures in its qualifying building and plant equipment or 100% export oriented. Let's look at the fund structuring. The legal structures most commonly used as the vehicle for private equity funds are the general partnership, or in legal state what you call limited partnerships, and the private limited liability companies. So those are some of the things that you get in terms of the whole gamut of activities in the private equity space and how they develop. So definitely, with all those incentives, there are opportunities for investment, and one can assess all those benefits as it goes, and definitely relevant agencies can always respond where those challenges are there in assessing those incentives. Now, Nigeria is marking its 60th anniversary, and if there's one thing Nigeria needs seriously in this period, it's private capital investments. The experts have said it. The policymakers allude to it. We don't have all the funds to finance infrastructure, for example, because infrastructure is one enabler for inclusive growth. You want to achieve double-digit growth as a nation, you need to invest heavily in infrastructure. Our budgets combined together cannot finance the infrastructure that will require a double-digit growth. So, what's the way forward? The way forward is private capital investments need to be given that opportunity to come in and address those areas, finance and provide funding to key segments of the economy that would unlock growth. We're seeing various amounts going to rail construction and the rail tracks, and of course, those train stations that are coming up. We're seeing various investments and agreements around the power sector. We're seeing prospects for unlocking the broadband space and driving a digital economy. We're seeing prospects around building more connecting expressways and roads and bridges across the country. We're seeing more prospects in achieving sustainable green environment where we look at infrastructure projects that will achieve a clean environment and harness our renewable energy prospects. Not just in Nigeria, across the world, infrastructure investment has become a major view why we see all the major private equity companies watching carefully where they can put their funds. We've learned now that where you have liquidity, where you have clarity in regulation, and where you have a very enabling environment, those are things that will attract those investments. So what is the way forward in terms of attracting more real-time private capital investments? We've seen a lot of companies, I mentioned some like Carlyle, invest into projects in Nigeria. More can come in. First, we need clarity in the foreign exchange management. All the experts have talked about it. Yes, the Central Bank of Nigeria is looking at harmonizing or unifying the exchange rates. But there's also the concern for liquidity. Foreign exchange liquidity is very important. Like I said, the first and second quarter capital investment importation report shows we are not even hitting $500 million in foreign direct investments. Second quarter, it wasn't foreign portfolio investment that was a dominant player, it was other shares. What's going to happen in the third quarter? We'll all be watching, but very important first, the foreign exchange management approach has to be reviewed. Some experts say liberalize it. But what I believe is we need clarity in the direction of the foreign exchange management approach. Yes, we've seen the import and export FX window and how it's tried to bring some level of transparency and clarity and stability to the market. But it is very important that the foreign exchange management approach enables access to more liquidity, review of all the subsidies that people have enjoyed, particularly subsidies to sectors, the need for transparency. And when we talk about transparency in the allocation process, because due to the pressures of the volatility in the crude oil price affecting our major revenue earner, the central bank has to manage the forex. And definitely, everything has to be done with one word, addressing productivity. How do we marry addressing productivity with ensuring that there is clarity and transparency in the foreign exchange management approach? That is a very big one. And that is a very key determinant for why private equity or private capital investments will come into the country. When they see that there's clarity in the foreign exchange management approach. The second is the effective policy and regulatory environment. It's always been said that uncertainty in policy will affect investments. And let me give you a very clear example. Yesterday, early hours of this morning, we watched the debate in the US between President Donald Trump of the Republican Party and Democratic candidate Senator Joe Biden, former Vice President of the US. Major reports from all the financial reporting mediums showed that investors did not get clarity. It was a heated debate, and there was no clarity in terms of what the directions. Yes, we hear in terms of energy. President Trump is pro-energy in terms of fossil fuels, not rolling back the renewable energy approach, maintaining his stand of keeping America out of the protocols that put it out of the CO2 emissions, the Paris Accord. And of course, Senator Joe Biden also taking his stand on clean energy. So in terms of energy, investors will know who to pitch with for the elections. That is how also investors look at Nigeria and say, what is the policy around petroleum and energy and oil and gas? And so, example of a petroleum industry bill that is passed and signed can attract huge investment from private capital. Just an example of how clarity in policy will attract more private investment. So where there's no clarity in policy environment and regulatory environment, they won't come. So that's one thing Nigeria must take seriously going forward. If we're going to make rounds of all the huge investment opportunities that are there, of about $100 trillion, we must have an effective policy and regulatory environment that attracts these investments. Despite every challenge you may hear about Nigeria, there are companies with great prospects and sectors. In this course of our program, discussing with experts looking at private equity investment and venture capital, technology, agriculture, healthcare, financial services still come among the major prospects for attracting more investments. So for private capital, those are companies or sectors that will continue to attract more investments. And so companies in that space are definitely repositioning themselves to attract more investment. So we expect to hear more news stories and groundbreaking investments in that regard. And then one major very key area of concern will remain the investment and ownership model of companies. So for example, if you had a television company and now you're opening up for new investments and you have a private equity investment coming, the takeover, the shareholding, the whole structure remains very important, because along the line, if the whole frameworks are not really worked out well, we may be having challenges. So the ownership model, the pathway for private equity or venture capital investors to come in remains one area that will continue to determine how private capital inflows come into the country. There are several examples of some of the developments we're seeing now and how those issues are addressed and resolved from our legislations too will determine if we attract more private capital investments. So indeed, we've evolved as a country. We've done a lot to see how government funds can promote and develop our economy. But we've come to that point where we know that we can't do it alone with government budget and funds. We need private capital investments too, to scale industries, to deepen our infrastructure level and fix those ones that are broken, to also transform our economy, create jobs, and address the rising tide of unemployment. What we must do is very clear. Synergy of policy, clarity in fiscal policy, monetary policy, especially the foreign exchange management, and addressing those legislations. We've seen some very good strides from the Finance Act, the Federal Consumer Foreign to Major Partnership provisions in the FCCPC, and also the various other legislations. As we continue to improve our legislations, make them strong, have strong institutions that cannot sway to any political interest, private capital will continue to flow in, and our economy will boom and create inclusive opportunities for all. That will be all for this edition of the Market Review. Special look at the private capital activities in Nigeria. The countdown begins for Nigeria at 60, and definitely a lot to reflect on Nigeria and how it's evolved as a country, but definitely with all clarity in policy and regulatory environments, Nigeria will not just be the leading destination for private capital investment in Africa, but also be one that is translating that investment to work for its people. You can join our website, www.prochange.com, to read our news reports, analysis around private equity activities and developments, and watch our videos also. Send your comments to news@prochange.com, those areas that you feel that needs to be addressed also, that we did not mention, that can unlock opportunities for private capital to come into Nigeria. To come your way again, let's make this happen again tomorrow, 10 a.m. on the special 60th anniversary as we look at the Nigerian markets. Thank you for watching. Have a nice day and stay safe.